Hey guys, it's Kevin with Watchhimtrade.com. It's Sunday night, June 28th, 2015. The futures market just opened and we've got some pretty neat stuff going on right now. There is a big gap down, as you can see. Futures on Friday closed around 2095. Today they opened down 30 points off the bat around 2060, and you can see this big gap down. We've kind of been consolidating. Last trade at 2061 on the futures. So the S&P Friday closed around 2101, right on top of 2100. This gap down, if it remains in the 30-point range, will have us opening around 2070 on the S&P. But I want to go back and look at some price action over the last little bit just in the futures. So you can see that overall we really haven't gone anywhere. We've had some bumps up, we've had some moves lower like this one that's going on, but ultimately haven't really gone anywhere. It's just been a consolidation market. So this is a 15-minute chart of the futures that dates back to the last few months. And I'm going to go back to March because there was downside activity in March just in the market in general. And once we broke out in March, or what looked like it was going to be a breakout, the market started moving some. And you can see this spike that I have a green line at the bottom of it and a red line at the top of it. This range right here, you went from 2045 in the S&P all the way up to 29 in the S&P futures, all the way up to 2090s in the S&P futures. That was in reaction to a FOMC meeting, and you can see that is right around March 16th. Oh, sorry, March 18th, 2015 was this move. So the middle of March, you'll look on the S&P daily chart, you can see this big move, and it took us off of a low. And what it did is it then had us trading between the green and red. This price action, which was really only like an hour and a half worth of price action, has kind of characterized the market since mid-March. You can see we've had a couple advances below the green line in late March, but it came above it, did some chopping around support, always ended up coming back above it. And then as we got into April and May, we started testing the red line, the resistance around 2090, rejected it in mid-April, came back down. Notice though we didn't go down to the green support area, fought back above the red, moved above red, but each time we moved above red, we kept coming back down and breaking back beneath it. In May, June, you started making new all-time highs. Looked like, okay, maybe we're getting away from that resistance, but then late May, you pulled back, again back tested the red line. Looked like maybe it's now turning into support as we held it a couple times, but then beginning of June, you lost it, popped back above it, lost it again, popped back above it, tried to hold it as support this past week, and now today, big break back below it. I'm just showing you this to characterize that while we've got a lot of volatility right here, market's down 30 points, we're still in the range that we've been in since March. So I wouldn't get too excited about a big breakdown, and if we recover off of this, I wouldn't get too excited about all-time highs. That's not what the market has been showing us. The market has been showing us a pretty clear channel. It's been a choppy channel, and a 30-point gap down in the futures is a big move, but until I see the actual channel change, I'm not going to look for that change. So just one other way to show this here. We had a big flush out in October 2014. You can see that clearly here. We went from 2000 down to 1850-ish and then rebounded. Ever since that October flush, this has been a channeling market. And the key support to me is on the 2014 close, which was right around 2058. If I just plot a trend line at that 2014 close, and then I put it up at the February highs, you can see pretty crystal clear what this market's been doing, where it's been finding resistance. It's been finding resistance up near the February highs around 2120, and it's been finding support at the 2014 close around 2060. The exact close is 2058. So this is another chance where it looks like we're going to come down and test this break-even area potentially. So watch that channel support. See if you continue to put pressure on 2058. It's going to take a breakdown below 2058 to set up a test on the March lows at 2040, and you need to break below the March lows at 2040 to really get this market going to the downside. Until then, I'm looking for a bounce back up somewhere in the vicinity of 2100. Maybe you don't get all the way to 2120 this time, but I'd be looking for at least some type of bounce while above 2058. Below 2058 puts the focus on 2040. So I just want to pop up here and get a video out because I see what the market's doing, and I know there's always a lot of drama off stuff like this, but I think it's important to keep things in perspective and not react to the market's reaction to Greece necessarily, but react to what happens next. You know, that's what's really going to dictate things. Where do we go from here? What's the reaction to the reaction? How do we trade this 30-point gap down? You know, maybe a lot more, might be a lot less by the time we open tomorrow morning. But just stay cool, have your price levels, make good decisions.